Hey guys, welcome back. We're back at Nifty hourly chart, and I have kept the setup as is since the last video because Nifty is still trading in a range from 400 to 900, and as you can see, I have labeled the some levels here. So let's get to it. These lines are your Gann angles, support and resistances. The red ones are your resistance lines, and out of the um, the R1, I'm taking S1 as support at 900, S2 at 600, roundabout. Okay, this entire week, Nifty's been trading in a range as expected, as I said Monday. At You could draw a options strategy here, which is an iron condor used for sideways market, where you actually buy and sell options contracts, calls and puts. So we sold one at 400, a call. We sold a put at 900. Okay, making the body of the condor. And for the wings, we bought a call at 500, and we bought a put at 800. Those are the wings of the condor. And as expected, the market has stayed within the body of the condor between 400 and 900, and so we got to keep the premium at expiry yesterday, which was very good. Okay, so that was a successful strategy. Now going forward, let's look at what Nifty is trying to do here. It is doing something very different than what it was last week or earlier this week. Excuse me. A quick word on these support and resistances. We're looking at 17,000 as support for right now, and 330 as resistance, which is right about this intersection here. Okay, so I'm now going to zoom in, and we're going to look at the possible move that I'm expecting in Nifty going forward right now. Just a hint, it's supposed to be a some kind of a big movement coming in, depending on this pattern that I'm going to show to you. All right, so bear with me. Just let me open my drawing panel, take a trend line, and I'm starting from the top here and just drawing a downward trend line here. We're making a lower highs here, as you can see. You take another one, another trend line. Okay, there it is. And here we have it. You see these this white triangle that I've made here up to this point. Ignore these two for now. This is called a sideways triangle or a straddle triangle or a strangle triangle. Okay, so what is the purpose of this triangle? What does this really signify? What this is when prices go sideways and start to narrow as the price starts to make lower highs and higher lows. What happens is we expect some kind of a big movement, either above, breaking out of this range, narrowing range, or breaking below the narrowing range. But the movement will be big. All right. Let me slightly adjust this triangle so we can make sure it's the supports are touching. There, that's better. Because as you can see now, the supports are touching all along, and so the resistances here. Okay, so this triangle is extremely profitable, especially for buying options. This is one of the few triangles that support, or few patterns that support options buying. Okay, we all know that option selling is usually, it's a passive strategy. You basically collect the premium and wait for the options to expire worthless for the buyers, and you take home your premium. But in options, this is an active strategy when you're buying options. So here, if you would make a straddle at around 300, okay, 17,300 strike, we buy a simultaneously buying a call at 300 and buying a put at 300. The real reason for doing that is we want to capture any movement, because we don't know if the market is going to go up or down. But when it does, it's going to be big. We know that much. Okay? So to capture big movements, that's why we created the straddle, the long straddle, okay? Where we bought a call at 300 and we bought a put at 300. So what we are expecting is the market to break either above the resistance of 440 and go towards 500 or 600 levels, or break down below 1700, go towards 800, or even lower. Okay, so that's when this option strategy becomes profitable. And the reason for doing that is because of the sideways narrowing range, creating this triangle. It's a very profitable triangle for options buyers. This is one of the few times that option buying becomes really profitable. Okay, so it might not be today that we do a breakout, but we're expecting next week that the price range will be broken. The range has been holding from 900 to 400 entire week, that it will finally be broken. So we just have to wait and see which side the market trades. Okay, but the key thing is we'll be prepared for either movement to make money, right? It won't matter which way it moves then. Okay, so I hope you guys understood what I'm trying to imply here. And well, if you have any questions, put them down in the comment section and I will get back to you. Okay, see you in the next video.